What the smart money won't tell you about silver, but I will. And that's that silver could be in for a hard slog over the next couple of months, and maybe a little bit beyond that. But that's not what most people want to hear. Those that called the breakout, some of them are talking about silver eventually going to 200, 300, or 500, and in a short period of time. Meanwhile, the other people who missed the breakout and called the peak, they're telling you silver is going to crash below $50 an ounce. But no, the evidence points to a likely range-bound market and hard slog before the next turn up begins. Let me tell you why. So there's several different things we have to go over so that we can understand my conclusion. Big picture, silver in real terms is still very, very cheap. Now here we can see silver against the S&P 500 here. The S&P divided by silver is about 89x right now, okay? And look how cheap that is historically. I mean, this is the move that we've had in real terms. It really only began 4, 5, 6 months ago. So historically, silver is still really cheap. This is nothing like 2011 or 1980 or anything like that. Okay, so we understand that. Now, even if you include bonds, and that's a 60-40 portfolio, 60% stocks, 40% bonds, silver is still historically cheap. We know bonds have been stinking lately, but silver is still historically cheap against the entire 60-40. So this is the data here going back 100 years. Actually, exactly 100 years. Silver divided by the 60-40. And we can see that this ratio in those last 6 months or so has emerged from a monster historic double bottom, okay? Bottom here, bottom here. This is a monster historic double bottom. I mean, this sets the stage for this ratio trending up like that and going massively higher. But we have had this big move in the last 6 months, the last 3 months especially. But even with that, let's compare to the move from 2002 to 2008. You see this move here, the move from 72 up to 74, which was pretty quick. So this move, in real terms, the percentage is still much bigger than this move right here. Same for this move right here. So this was a cyclical peak for precious metals. This was a cyclical peak. So this would have to go up, not a little bit more, but more than that before we would have to be worried about a cyclical peak. And mind you, this peak right here, that is, I believe, when you're looking at silver at $100 or a little bit less. So that's the look as far as silver against stocks and bonds. Silver in real terms is still historically cheap. Now, let's talk about the historical chart of silver. And this is not the 160-year chart I usually show you, but it goes back 100 years. It's still pretty good. And what we see here is this massive, beautiful breakout from a 45-year-long base. And I've also sketched in here the declines that we've seen in silver. So to this point, you have a 47% decline. This was 42%. 2008, this was 62%. Now 2006, 38%. 2004, 36%. This move here, 68 to 72, was 54%. So these are the comparable declines. But people, this is really important to understand. The key difference is silver is in blue sky territory. Okay? When a market or any asset is in blue sky territory like this, when there's no overhead resistance, that is massively different than all these other points here. And that is because there's no overhead resistance and there's basically no sellers, or there's very, very few sellers. When the market gets really overbought here, 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 or even here, there's resistance, there's memory, there's points where there was big selling previously. And so once you break out here, there's no sellers and there's no resistance. And that's part of the reason this was able to shoot up so high and so quickly. But even though it's come back down, almost cut in half, that doesn't change the fact that there's so few sellers at this point. You know, it's only the people who bought up here on the way up that got stopped out. That's your only resistance. And so $50, $55, that's massive strong support. So we know that silver is historically cheap in real terms, and over the coming years and next decade is likely to move significantly higher. But zooming in, we also know that massive strong support here at $50 and $55, but there's also going to be stiff resistance up here above $100. So that lends itself to a market that is going to trade in a range and also needs time to repair this recent technical damage before it can really begin a new uptrend and later an impulsive uptrend when it eventually takes out the $120 high. Now, looking at the short term, this is a daily candle chart of silver. It's the same charts, but I've sketched in here potentially how this could play out. This is probably the more bearish outlook, and you guys know that I like to be conservative, okay? What does Warren Buffett say? Rule 1 is investing is don't lose money. Rule 2 is don't forget rule number 1. So that's why I like to look at things through a conservative lens. So we know that here, $55, we know that this is really strong support. This is a floor. And this is the action on Friday where silver made a very bullish hammer. So it's possible that even here at this low of 60, this could actually be the bottom. That's possible. That's what I've sketched in here. But to the more conservative glass half empty scenario, it just has to grind. You get an oversold bounce like this. Silver can't get through this resistance here. So it basically grinds lower. It eventually breaks below this low here at 70 and has to carve out a low, something like this, before it starts moving back up again. So I think this is the glass half empty scenario. This is probably the glass half full scenario where you have put in the price low here, and at some point you probably get a retest that might actually go lower and find its way to 64 again. But you put in a retest and you don't make a new low, and then it grinds back up. In either case, it's going to take time, I think, to get through $90 or 87. Because this was the point right around here when you had that last parabolic move. You had a bit of selling here in the low 90s. It stalled for a little bit below 100. Then it shot up to 120. And we can see during this crash, the initial rally here peaked right around 90, came back down. So this is clear. This is going to be resistance moving forward. Okay. Whereas right now, we know that this is support. And we also know the 100-day moving average right here is support. So who knows? Maybe that gets tested again at this point. And the other thing I'd like to mention is these sketches are rough guesses from here and now. This is all the data that we have now. Okay? Things will become clearer over the coming days, weeks, as we get more data and we see how the market is trading. If silver is able to bust through 90 pretty easily like this, that's really significant. And then we would say, okay, well, this here definitely looks like it's going to be a floor. Versus, okay, if silver really fails to get back and even test this, then you have here where it just kind of dies like this and trades lower, and then it's going to test 55 before it puts in a final low and rebounds. So I know that's a lot to take in, but there's a wide scope of probabilities because we're only days into this crash and correction. And so the biggest takeaways right now that we do know is 87 to 90, that's going to be resistance. And then your support is going to be 64 to 70. So those are the strong takeaways that we have. And again, as the days and weeks go by, we will have more data here and a better idea of how this will play out. Now, moving on from silver, let's talk about gold. And so this is my major breakouts analog chart for gold. If you're not familiar, we are plotting the major breakouts in gold's history on the scale of the current breakout, which began late February of 2024. So this is weekly data. This is the current gold move here in black. The light blue, that's the breakout in 1972, the move up to the end of 1974. On the current scale, that reaches 9,200. The average here is the average of the 72 to 74 move and also the 05 to 08 move And so you take the average of that, it gets to nearly 7,000 about 12, 13 months from now. And if you look at the current market, it basically has traded with the average pretty well. And the current breakout out of these three breakouts is the second biggest. The 72 to 74, that's the biggest breakout in gold's history, the biggest breakout of all time in the history of capital markets. The 05 to 08 breakout was significant, but that wasn't to new all-time highs. We explained the significance of that earlier in this video. So this is where we are for gold. And what's interesting is gold, as far as intraday, which is how we calculate these corrections, gold has already corrected 21% intraday. But in weekly terms, look, this week it actually closed like 0.5% away from the weekly all-time high. So that's really interesting. But the good news is gold has already corrected 21%, because weeks ago we were saying gold, to get to this point here, it's probably going to need to correct 20% or more at some point. So that's already happened. The correction will continue in terms of time, and I'll get to that. But this is also encouraging as far as the correction. So this is gold against the S&P 500. Normally I show you this chart and we use just the weekly closes, just the lines. We don't use the intraday or intra-week action. But in this chart, you can see the intra-week action. And so during this hard sell-off in precious metals, gold against the S&P, it came back here and it retested the breakout. This breakout several weeks ago from this 12-year-long base shot all the way up here, came back during the hard sell-off, retested 0.65, 0.64, and look where it closed, 0.72. So this is a very good sign. It's a good thing that this breakout is holding. And so even if this comes back and corrects like that for several months, that's no big deal. As long as it holds above this support, that's telling you the next move is going to accelerate like that. Now, finally, let's look at gold and its daily candle chart. So gold closed just below 5,000. Really nice bounce from this support here. And this is the intraday action from 5,600 down to 4,400. And that was only in what, 2 or 3 or 4 days? It's hard for me to see. And so this is actually a positive divergence for gold right here compared to silver. This low, and that's a higher low. But anyway, for gold, this level right here, 5,000, this is going to be resistance moving forward. And so for support, you have this level here, 4,550. And then if you look at the weekly chart, 4,250 to 4,500. Now, as I said last week, I do think that that there's a risk that gold could test its 200-day moving average here. So this is a sketch of how it could play out. And so remember, there's a time element in corrections. So you have this technical damage. This is not going to blast off like that. This needs time. Whether it goes like that or even if it moves up like that, it needs time to digest this huge volatility where you had this parabolic move in the short term and then a crash. Now you're getting an oversold bounce. So it needs time to find a base, find its equilibrium. And it looks to me like it's going to be in this 4,400 to 5,000 range. So that could be the new base moving forward. And then at some point, maybe in the spring, at a low, you get a test of the rising 200-day moving average. And that thing will come up quickly. Okay, so it's not exciting to say that the market is going to be range-bound. Everybody loves to say it's going to the moon or it's going to crash. But that's the reality. We're looking at a range-bound market for gold and silver. It's going to be a hard slog through winter and into the spring, most likely. Now, another thing I want to mention, crypto is crashing. We talked about this risk a month or two ago. We did a video on it with respect to gold. Now, silver and gold are getting conflated with crypto, but I just want to reiterate that gold and silver are kicking Bitcoin's ass in real terms, okay? This is gold against Bitcoin, silver against Bitcoin. Look at these ratio charts. This is a major bottom that the gold-Bitcoin ratio has broken out of. Look at this move here. This is still early. Silver against Bitcoin, you can see the same thing here. This is a major bottoming pattern. This is a complex inverse head and shoulders bottom. This is a inverse head and shoulders bottom. So these are significant breakouts. Now, before I get to the stocks, I'd like to tell you about the Daily Gold Premium, our premium newsletter. And first, I would like to thank all of you who have signed up, whether recently or in the past. Your support allows me to do the work that I love to do. And in this service, we are focused on finding the best junior companies that have 5x to 10x upside potential over the coming years as this cyclical bull market, gold and silver, continue. And in this service, we are focused on company analysis and picking the right companies. And these are companies that we personally invest in. Every buy in the newsletter, that's a buy in a real portfolio. Same with every sale. And so if you own juniors and minors and you're looking for some help and guidance with stock picking, head on over to thedailygold.com/premium. And I promise you, you won't find a better value in the gold newsletter space. Now, wrapping things up here, let's take a look at these daily charts of the miners. So we have GDX here, GDXJ, SILJ, and the miners have a much cleaner picture than gold and silver. And we can see here, GDX has bounced from 92 up to 97. Strong support here at 85. GDXJ bounced from 121 up to 128. Here's strong support here, right around 110. SILJ from the 30s up to nearly 33. Strong support here, call it 27 or 26. So on a short-term basis, I wouldn't say you need to rush back into these yet. I would love to see, and we might get it, just another sell-off and another leg down to these strong supports, and that would make for a really good buying opportunity. And finally, I'll just say, remember people, if you own individual stocks, everything is stock specific. Some stocks might be a great buy right now, while some might not be a great buy for another 3 or 6 or 9 months. So if you do own individual stocks, focus your attention on those first and foremost. That's all for this week. I'm off to the Super Bowl today when you'll be watching this video. Hope you had a good week. Hope you have a great weekend. And leave a comment. Let me know what you think. And I'll talk to you guys again next week.